Why would you say Web3 has a greater lack of talent than what you would potentially see in other industries?
There's lack of controls, and it's very easy to commit soft crime or hard crime with that. You have this general sort of devoid of like a lot of talent that just avoids it.
Our guest today is entrepreneur and Web3 founder. He co-founded Acompli, which was later on acquired by Microsoft for $200 million and became Outlook Mobile. After stepping down from Microsoft in February 2024, he co-founded DGods before stepping down in 2024. Today, he consults Web3 businesses on how they should grow and scale their business. Please welcome Kevin Henrikson.
What are some of the big mistakes people make?
It's easier to turn a boat with 10 people in it than to turn a cruise ship with 100. You really start to erode the ability for your best people to do their best work.
Why would you say that the failure rate within Web3 companies is so high? Even the most established brands, it almost feels like there's a timer.
The failure rate in all businesses is high. On Web3 in particular, it's very, very easy to over-financialize. Again, companies take a long time to build and a long time to see success. We all read about the unicorn and like they launch and they go amazing and you see the chart to the moon on the first day of the first month. That's not how business typically works. And that's not how most businesses grow. Even look at Facebook and Google, right? They ground in the garage a long time before they saw that hockey stick.
When it comes to business, what would you say are some of the most costly mistakes that one can make? I was reading somewhere, I was watching this business workshop by Patrick Bet-David not too long ago, and he mentioned that for leadership level positions, oftentimes hiring the wrong person ends up costing twice their yearly salary in terms of opportunity costs, onboarding them, training them, and then having to find someone else. For you, those late nights that the trenches often ask, what are some of the big mistakes people make?
Yeah, I think the hiring one's interesting because what the costs you laid out are like hard costs that are pretty easy to measure, right? What I think the soft cost that's actually the most important one is the impact on your best team members, right? And so if you think you bring in someone who's actually going to slow the team down, you've actually a founder actually asked this me in DMs just recently, and I'll probably write a thread or post on it at some point. But they're in a hyperscaling mode. Their app's going really well. It's a really popular D app on Solana right now. And they're like, hey, should we, lean in and aggressively hire and kind of like overhire for the really bull case, or should we be more careful? And I said, you always just want to hire the best people and take your time to do that. And so there's two reasons. So like what we always say, like you never want to grow your team more than like kind of 50%, right? Because you start to dilute the culture, dilute the team. And if you have, and you've held the bar high early on, you've got a really strong team. You start to bring in a lot of people quickly. It's expensive to interview them and do the proper vetting. But more importantly, if you start to make mistakes at scale, AKA bringing in lots of people that are sort of like below what the bar that you should have set, you really start to erode the ability for your best people to do their best work, because now they're spending time with people that aren't as good. Now they're having to go back and at the very least kind of audit and correct the mistakes that other people made. But more importantly, man, it's just shitty to be in a boat with slower rowers. So I'm always like smaller boat, bigger rowers, right? And you're more nimble, especially as a startup and especially in those early days. It's easier to turn a boat with 10 people in it than to turn a cruise ship with 100. Even if that 100, they're all rowing at 10% or something, and you can do the math and say, oh, there's more like rower output, you're not going to be able to make the best decisions.
Kevin, why would you say, talking about scaling and hiring, and I ask this because like personally, learning from someone with decades of more experience than you are, finding myself in that period of quick growth, why would you say Web3 has a greater lack of talent than what you would potentially see in other industries?
Yeah, I think there's a couple reasons. Spent most of my last 25 years in Silicon Valley, hiring kind of the 1% of the 1% at top startups that are, venture scale, that have like, a lot of the quote unquote, the best people in the world come to work here to build, especially pre-COVID, where like there was a deeper concentration of that talent, deeper concentration of history of companies winning, deeper concentration of like the right funding to kind of make that possible. And then there's the network effect of just being around smart people. And I think I had been in crypto for a while, right? I have crypto kitties in my like, one of my old ETH wallets, 2017. So a lot of people kind of came to crypto, sort of during COVID, right? Or sort of during different waves. Read the Bitcoin white paper even well before that, but had always thought of it as like really interesting technology, really interesting sort of technology, like so programmable money,
Hmm.
but had never thought like, oh, I'm going to go work in it, right? And we know this, right? In the early days of crypto, it was a lot of gray area stuff. It's the Silk Roads and like saying selling drugs online, or being used for things that were more illicit. And what I would say is like a lot of my 20 years was building email platforms. And whenever we'd launch a new email platform, the first people that would show up to use these email platforms were potentially or most likely people that had been banned from previous email platforms, right?
Interesting.
And I think there's a lot of that case in crypto where a lot of the early adopters of crypto were misfits or had been banned from a current system. Either they thought the current system was rigged or broken, right? There's kind of the anarchist view of like, hey, this is the way to take over the government. I think there was a lot of people that were using crypto for cases where it wasn't legal to use money, or it wasn't legal in their country to use money. And so you have all these stories, and those stories got very viral. And then because of that, for the same reason, there's lack of controls, and it's very easy to commit soft crime or hard crime with that because there's lack of controls. And those stories typically get a lot of airtime, right? Those are great
Mm.
things. And so I think there's still a general sense, if you walk into the average corporate America, even today, right? Even today, kind of with the Trump administration, the crypto president, and all the things that have changed in the last, 30 days, um, 21 days, I think, as we sit here, is that you still see the Main Street view of crypto is crypto scam, crypto like not good. And so you have this general sort of devoid of like a lot of talent that just avoids it. And this is probably not the best analogy, but when I was getting out of school, so I went to UCLA in LA, and when I was graduating in 99, the highest paying jobs coming out of school was working in the porn industry. So because it was just at the time where the internet's coming out, and so all the kind of traditional sort of porn houses in like Glendale and Vivid, you had these jobs that were paying 4 or 5 times like what a software engineer should get paid. So if you're like, about computers, you're like an IT person or whatever, you could go get 4 or 5 times your salary to go in LA to go work in porn, because that was like, again, not savory. You put it on your resume. And so there's always this thing of like, well, once you go on that, you can't take it off your resume. And so there was a lot,
Mm.
lower number of people, those jobs. We saw it a lot in the valley here with weed companies, cannabis companies. So again, pick your views on it one way or another. It sort of is like, oh, like I don't know if I want to put that on my resume because my aunt, or there's like this sort of, I don't know if it's a shame, but it's just like they're not sure that their family or their friends or something will think
Absolutely.
differently of them. And there's a version of that in crypto, right? And so literally when I would say, hey, I'm going to work in crypto, and sort of announce that I'm doing some Web3 stuff, uh, you know, after my last job transition, they were like, whoa, what's going on there? Like that seemed like questionable. Like, I don't know. Like they're, and again, I can see that, right? Because a lot of the stories that get the most mainstream media press, and even today, right? If you go into the most mainstream kind of legacy media and read about crypto, yeah, you'll get the Bitcoin and hey, there's some stuff coming in, but a lot of it is person got scammed. Even the views of the Trump coin on Twitter versus, and what we as kind of like had seen how that is a big shift in the political and sort of policy narrative, very different than the way you read that and say, oh, the president launched a meme coin. That's a scam. There's all this, bad things. There's a lot of more articles on that than there was like, hey, there's a shift here. There's something interesting happening where the industry's moving forward. And so longer way of saying that there's still a kind of mainstream legacy media view, in lots of communities. Pick your sort of like traditional work community, whether it's finance, technology, or even just real estate, business, all these other things where it's like, crypto's the way that like, we're not sure, right? Go do a real estate transaction, go buy a house and be like, hey,
Totally.
can I pay in Bitcoin? I mean, just saying that, you instantly put a mark on yourself where the realtor's like, oh, I don't know if that's going to get approved, because they've heard the story of like something at a bank or something that didn't work, or saying, hey, you walk into a restaurant and say, is it cool if I pay in crypto? They're like, it reminds
Mhm.
me of a story my dad used to say, it's like, obviously my dad passed now, but uh, he would say, somebody would want to pay us with a check or pay us with this. He's like, yeah, no problem. Go to the bank, cash the check, bring me the cash. Because it's like, hey man, I trust your check, but go cash your check. You go cash the
Interesting.
check, right? And so I think there's a version of that in crypto where it's like, you go convert that to the currency that I respect and
Yeah.
know, and then go in. And so I
Yeah.
think that aura or that sort of way of thinking still creates this thing where, quite frankly, and then the jobs don't pay as well, right? Like there's jobs in crypto where you're a software engineer. If you just take the salary that you get paid is not going to be the same. And so I think the other challenge is this, like if you can go get a job at Google, Facebook, Microsoft, these kind of traditional big FANG companies, and compare, if you can pass that interview and get that test, which most engineers can't, right? Like, the average software engineer is not going to be able to go get a job at Google for a bunch of reasons, right? But if you can, and then would you choose to take the job at Google or choose to take the job in Web3? You have to
Yeah.
believe something very different about just software. You have to actually believe in Web3, participate in it, have, participated in one of the greatest engineers we hired at Dust Labs, for example, had worked at Google and Pinterest and, incredible Silicon Valley engineer, but had sort of like got in love with NFTs during, the COVID times and sort of really fell into it, was a
Yeah.
really big holder of DGODs at the time. And so I think those people exist, but the number of them are very small. The number of Google engineers that have come into Web3 and build is a fraction of the ones that have went to OpenAI, that have went to, other sort of hot AI tech companies from Google, rather than saying I'm choosing to go to crypto.
That's an interesting point you bring up, the free market of talent. On your side, you've built a comply who sold for Microsoft a little bit over a decade ago for $200 million. dollars. And you were the previous CEO at Dust Lab. You've seen the business trenches both in Web 2 and in Web 3. Why would you say that the failure rate within Web 3 companies is so high? And what I mean, and by failure, it oftentimes even the most established brands, it almost feels like there's a timer. There's an expiry date, just like in the back of the food in your pantry.
The failure rate in all businesses is high. The failure rate of new sandwich shops, in your local town, very high. The failure
Mm.
rate of most small businesses is high. So I think that let's start with that. I think the failure rate of the local sandwich shop on Main Street in your little town, nobody knows other than the people in the town, right? Failure rate of a startup in Web 2, yeah, a few more people know. It might have, if you read, TechCrunch, or you read Crunchbase, or, you're sort of in it, or your friend happens to know a friend that works there. In Web3, they're more visible, right? Their default community first, their default publicity on, their default hype first. There's just the visibility of the people that are in Web3 to see when one comes up, and the attention in social media. Web3 lives on crypto Twitter, right? Yeah, a little bit on YouTube and here, but crypto Twitter, and like that is the fastest moving, sort of like quickest way to spread information that's both, good and bad, and failures are engaging, right? Like people love to watch the sort of epic fail, right? I mean, you go back to the ESPN videos of like, the joys of champions and greatness, and then the dude just tumbling down the ski hill, right? Like those are the two things that people love to watch. They love to watch, an ambulance chaser thing. So I think when we say that, like, why do most crypto businesses fail, or why is it so hard, or this timer thing, I think the real answer is lots of them fail. I think the pulling back the curtain a little bit on that, on Web3 in particular, it's very, very easy to over financialize. Everything's financialized, right? You and I having this conversation, people can go drop a meme coin, or they can go say something, or we say a ticker. You have a big audience, from your, business, but also your personal brand. And you say something, people will go trade on that. They will go financialize. They will bet against it. They'll go do something on Polymarket. That doesn't exist as much in the like sort of like Main Street sandwich shop world, and even in Web 2. And those are private valuations, right? If I go fund a startup, even a hot one, if it gets funded at some insane now because they've convinced a VC, or the vision's good, or they need the money, the number of people that know what that exact details was of that founding, there's no liquidity. So even if the VC makes a mistake, and we've seen this, you get a large funding and the team's criminal, or they make, a bad decision in life that sort of says, oh, that's bad. Well, it's not even visible. Like, what was the stock? It was $1 billion company. Like, what's the new valuation? Like, until it literally goes to zero and fails, but which is usually like by the time the lawsuits settle or something ends, a very, years. There's no public liquidity market. Where with Web3, the instant it's on chain, it becomes financialized, right? You can't just be like, hey, I'm starting this business and I'm kind of going to put some stuff on Web3. whether it's a token, a coin, access, whatever, even if it's just social credit, instantly it's like, well, how many followers do they have? How many likes are they getting? Like, and then why does that matter? Oh, well, that's going to be matter what their token's going to be. What if when are they going to launch the token? How do I get quick money? Talking to another founder last week, and they're like, oh, all my advisors are pushing me. Now's the time to do TGE to launch a token. And I was like, cool. Do you need the money? And he's like, no. And I was like, okay, cool. Why don't you go back to those same advisors and tell them that you're going to do a 4-year lockup, and on year 4, you're going to start dribbling it out at 1 month for the next for then 4 more years, right? And he was like, no, come on, man, nobody's going to take that deal. And I was like, well, why not? Like, they want you to do a token. It's good for the company. Like, why would they not want you to see they don't think this is going to take 4 years to build like a really epic big business? And he's like, no, like they want to see like 6 months or a few months or something unlocked right away. Oh, why is that? Well, it's deeply financialized, right? So like people that are pushing for the token or pushing for this, they fail that test of like, well, can you actually go? Well, they're like, that's just not how crypto works. And what they're really saying is like, the reason that I'm in crypto, or one of the benefits of crypto, is that I can take early financialization, and the velocity of money and the velocity of finance in this space is higher. And so that leads to things hyping and being financialized well before they're defended, right? Most startups, again, companies are not take a long time to build and a long time to see success. We all read about the unicorn, and like they launch and they go amazing, and you see the chart to the moon on the first day of the first month. That's not how business typically works. And that's not how most businesses grow. Even look at Facebook and Google, right? They ground in the garage a long time before they saw that hockey stick. Yeah, we're seeing a few accelerate now, but nothing like that. And so I think that's the main reason, is the financialization so quickly before the business is sort of ready to have that, and the controls in place. And even like if you look at the Jelly stuff that came out this week, like very sophisticated sort of Web2 venture, founders behind it. But again, sort of like how that was received in the market, and being able to talk about like, I was watching a clip last night where they're like, oh, well, just when everybody opens the app, they're going to get 100 Solana. And what they were thinking, and sure, the guy, like 100 Solana is a lot of money. I'm like, they're not actually going to give you 100 Solana to sign up for their app. Like and so that there was a bit of miseducation on that, individual's part. He keeps saying Solana. What they meant was like their little token that was worth a few cents, right? Like the jelly token, they meant that, hey, we're going to give them, 100 cents. They're going to give them $1, which makes more sense. You sign up and get $1, like US dollar value, not you're going to get 100 Solana and get 20 grand in your, or 30 grand, on your sign up. But again, like, they're trying to connect to the language, because they're seeing like everybody talk about the coin and the credit. And they're like, oh, we'll just give them 100 of it. You're like, well, that's a lot when you misstate like what you're trying to give. And so then people are trading on it. You watch all this kind of like tweeting of like, oh, they're going to give this away, or what's that going to work? And then you see traditional brands coming in that's even less educated, right? These are well-educated folks that kind of understand the sentiment. And yeah, when you see big brands come in, they even have less education around what's the right way to approach this.
You mentioned the hockey stick. A lot of brands, often a lot of projects, brands, whether it's an NFT or a token, often fail before getting that hockey stick moment. Would you say that oftentimes emitting tokens, whether fungible or non-fungible, an NFT or a token, does that oftentimes end up becoming the Achilles heel of that project, where you're now fighting on two fronts and you end up winning on none?
Yeah, I think once you decide to launch a token, and again, whether that token's an NFT, a meme coin, some kind of utility token, you become tradable, and you get into this kind of like weighing machine sort of model, or hype machine, right? Like people will start trading on that and valuing. And while number goes up is the best marketing in crypto, we've always said, when things are going well and numbers are going up, it's the greatest. And you're building lots of fans along the way, because everybody behind that number is cheering for you, in a very they're cheering for their bags, they're cheering for you. But the instant that it goes the other way and number goes down, the delta between your ultimate high, whether that's a local high or a global high, and your current price is the tax. And so if you look at all these, right, and say, hey, I launch a token, let's just use simple numbers. It's a penny, it goes to $1. And then it kind of, crashes back down to 4 pennies, right? Now you have 96 pennies of value, 96% of the people that, in that thing, if it was one person that bought at every point on the chart on the way up, is now not a fan, right? Or they're now frustrated. And there's a silent tax of people that like, oh, I bought it at $1. And so everybody that bought at the high number that's down is like, oh, I'm kind of bummed. But then like, in any community, there's always like a vocal minority that's like, storming the gate saying this is terrible, you're rugging and you're picking all these words that, aren't true potentially. But also like there's just a lot of negative sentiment because again, they were financially motivated, right? They bought the token on the way up because it looked exciting or that, they were part of it. Great marketing, right? Was selling them to getting in. But on the way down, that frustration quickly turns and then it becomes an anchor from a community's point of view. And so when I, talk to founders or talk to teams, think about like why and when you need the token. And then again, like this view of like to the moon and all the kind of like traditional sort of like early days of crypto. Like it is exciting when things go up and it is exciting to see the green candles and to see all that. But you're building an anticipation of something that with whether you want to or not, if you're genuinely excited, the fact that people can trade on your excitement and will both trade on what they know, inside information or whatever, that's going to be a tax when it takes a little longer, right? Because you're like, hey, I'm going to take a week to build this, a month, a year, whatever it is. Timelines are always wrong, right? I mean, famously, there's lots of companies out there, whether it's Apple or Jobs or who, or Elon at Tesla, like they was like, hey, we're going to go build this and this will come true. It's like, man, innovation's hard. Like it takes time. Um, and even with if you look at the difference between SpaceX and Tesla, right? SpaceX has also had really, really big mountains to move and built amazing things, but their equity isn't traded day to day, and people aren't talking about the ticker on a day to day market. Now, if you're in a investment groups or something, you can see the values and things like that in those trade, but it's unlike like Tesla, which is like even just as a public stock, you see that thing move on every announcement, every video, good, bad, different, and crypto takes that turns it up to 11, right? Crypto says like, oh, we're going to trade on things before they even built. We're going to trade on white papers. We're going to trade on the GitHub repo. We're going to trade on a
Fascinating.
tweet, right? Like they start trading on very small things because they're looking for the fast money. It's exciting, right? It is exciting, but it starts to have more casino vibes than it does investing vibes. And I think people get confused with that. And who actually owns what is also sort of a challenge.
Fascinating. So it's like an amplifier. You not too long ago, I was speaking with a founder, young founder. They managed to build a really in-depth, accurate social sentiment tool, not too dissimilar from what Kaito has or Cookie 3. I was just impressed that they were a 21-year-old team. We were exploring, looking at what they were doing. And then 45 minutes into the conversation, he's like, yeah, Leon, by the way, our token just launched last week. I was like, what do you, which token? Why did you guys launch it? Like, what does that have to do with the business model? So for you, Kevin, when should teams take on the burden of what could become the token and the potential upside that comes with it? Or when should founders stay away from that in the meantime?
I think some people have to launch them, right? Because they use them as a way to fund the company, right? So I think this internet capital markets, the idea of like using a token to sort of be the initial funding, I think is a relatively new idea to be described that way. Although that, in the history of tokens, there's always been that sense of like there's a fundraise involved here. And so I think there's like a founder's like, man, I need money. Like this is, I can't go raise money. I'm going to go raise it this way. I think there's a risk to that because that comes with a tax, like that we talked about all the downsides. But I think the other kind of way to look at it is like, let's say you have a business or a product and the thing's working really well or it's getting started and they're like, I'm ready to launch a token. And then you're like, well, what is the token? What's the token for? And I always, start with like, could you just use USDT or USDC? Can you just use a stable coin to achieve that? Are you just looking for like crypto transactions or, just looking for a way to like have easier on ramps? Could you use Solana? Could you just use Sol? Like, do you have to launch your own token, right? And of course, that takes away a bunch of incentives around who's going to make money and who's going to trade and all these sort of like, the volatility of Solana is going to be a lot lower than your individual token, just like the volatility of Bitcoin is going to be lower than some of the other coins kind of thing. And so when you take that volatility away, especially like targeted volatility for the given founder, do they still need the token? That I like to go down that path and discover it. Now, I've recently been talking to a couple Web2 founders, and the Jelly Jelly one's very aligned with this, where it's like, what if we launched the token as a way to build awareness and discussion and build community, right? And so this founder was like, look, we've got this product. It's like kind of traditional Web2 product. It's killing it, growing really fast. Consumer product. And sometimes, people will come out and say, oh, I don't like the model or I want this. And they're like, there'll be the vocal community. Somebody will write a YouTube video or a review, right? It's like, I don't like it. And then they're like, well, how do we activate like our own sort of like, kind of keyboard warriors to come out and like do videos and quotes the other side, the kind of classic, like, how do you get better Yelp ratings? It's like, well, you ask all your best customers to Yelp review you, and they're like, what, this restaurant, why would you give restaurant reviews? Well, nobody, the good customers just come and go, they just come to the restaurant all the time, but they're not incented to to write good reviews. It's like you're always incented to write the bad review. And so I think there's this narrative where crypto can become an amplifier for community, for marketing, for PR. Now, the downside of that is it does work, right? You can go launch a token and get tens of thousands of people to download your token, where if you just say, hey, I'm launching a new app, or I put up my new waitlist for my website, you may not get tens of thousands of people to show up in a few minutes. And so I think the allure of that is positive. I think the downside is people need to think about, like, now what's the tax? And you look at, these founders that have done that, and they're constantly saying, hey, we're coming up with utility. We're going to like have a meeting with Solana to go figure out and learn some more. We're going to figure out how Dex Screener works, a week after the token's launched, right? You're like, okay, like a little late on, getting to college and going to the education there. But I think that's the piece that I look at, is like, can you just use crypto? Do you actually want to take on the burden of like now managing it? Because you're managing a crowd, and you can't manage it in the same way. You can't like, oh, I'm going to release a new feature. Like, honestly, a lot of the holders don't care about your new features. They just care about, like, is the token going to be up or down? And can I PvP and trade against that? Or can I make $1 off my, 10-cent investment?
So based on that, let's say you can take USDC, USDT, or crypto transactions that won't affect how the platform works. Let's say you do not need the funding necessarily. You're a positive cash flow company. When should one launch a token then?
I think you launch it when there's a good reason, right? So that you want to launch it when, like, okay, there is a reason that I am going to go make this part of my, there's going to be some utility. There's a reason that my token and having my own little ecosystem that I sort of can use makes sense, right? And so if you think in the NFT world, it's like, hey, I want to drop art for my community. I want to connect with them. There's a reason, right? You're like, I have this thing. I want to, like, bring it on the blockchain in that way. Or you're like, hey, I do have finally proved out the mechanics. Like, one of the things that Shan with the redacted tokens doing
Yep.
is like they're planning to use that token to literally use it as an experiment token. So a lot of the products and things that they're building, both released and unreleased, will say, hey, you can use the RDAC token to be part of that. You can use, that to sort of experiment with your tokenomics to see how things work. And if it doesn't go right, or you don't have the right incentives, the right token sinks, the right sort of utility built out, or the product doesn't work well with a token, it doesn't hurt you because you haven't launched your token yet. You're sort of like using that on the back of, this sort of token that has a lot of other use cases and things like that. So I think there's this idea, and, because I've always just said, use USDC, use, Sol, use USDT. As a token, but it's harder for you, the cost of like buying that token may be a lot higher, right? There's other preconceived notions with that. And so for me, the when to launch it is when you're ideally as late as possible, right? In the case, like when you're ready, because like if you launch the token first, you can do that, but maybe that's as late as possible for you because you need the money, or because you want that community to be the thing that you rally around, right? That's again, but you have to make that explicit decision, right? Because I think a lot of people say it's really easy to get hooked on the quick money of a token going up, the quick attention and community that's going to go. But I think, again, go back to a Web 1 or Web 2 startup, when you do the press release and everybody shows up at your website and your website goes down or your app goes down because there's just too many people at the front door, right? And so I think there's also that downside where lots and lots of attention not always is the best thing for a new business, right? And you can, again, go back to Web 0, right? The sandwich shop example on Main Street. He puts out a promotion and says, hey, buy one, get one free, buy one, give your friend one free. Thousands of people show up. They can only make, 100 sandwiches an hour. They're going to have a lot of disappointed people, right? And these have all happened. They don't get the same press. The thing in crypto is they get a lot of press. And because it's a global 24/7 internet capital market, people show up en masse and will probably could overwhelm your ability to sort of like, influence or be able to talk through the sort of outcomes of like whether they're good or bad. And so I think you just want to be ready for that.
So for you, the token or the NFT is really a way to gather the troops. Use that as an amplification mechanism.
It's an amplification mechanism. It's definitely going to amplify, right? Because it's people are waiting for new things and exciting things. They love to move, right? Every new thing, sucks liquidity for a moment, and sometimes for a very, very short moment, and sometimes for a little bit of longer. But there's a large contingent of kind of very active, crypto traders or people that are, in the trenches that are sort of looking for something new, and they're going to go to it. You need to be ready when that comes. And then I think like the bigger story is like, is there actually a reason there, right? Do you actually need the token? Does it actually make sense? Is this the right time? Have you
Mm.
put the other investments in place? Have you built out your sort of traditional marketing funnel, your traditional product funnel, where it makes sense for that to go, right? You've seen lots of tokens launch. They don't have their Twitter set up. They didn't validate their website. Doesn't have really basic stuff. They haven't even got a place for people to kind of come learn more because they just haven't got there. They're like, oh, do token first, and they're like, oh wait, we didn't think about there's no Discord or there's no Telegram group or whatever they're going to use for.
Retention.
Yeah, the retention of that is really low, right? And so I think thinking about this from like a proper launch vehicle and knowing that you're ready at the very basics. And I think, I mean, I'm sure your team and companies worked with a ton of people in this case where it's like, look, man, there's just a small checklist of things of are you ready? Do you have the right kind of messaging set up? And then you can go do it. That the impact and the effect that you're going to get back to you dramatically different if you've done a few things right up front.
Mm. Interesting. Okay. I'm going to ask a very simple question. I'd love to see your interpretation of it. Is floor price or token price a good indicator of success?
It's like asking if the stock price is a good indicator of success, right? And I think, there's a pretty famous quote, right? Like in the, short term, like, very hype driven, voting machines, right? They always say like, in the short term, the markets are like voting machines. In the long term, they're weighing machines, right? It's like, what's the, if you look at the short term, you can see like a day to day, this stock good, this stock bad, and the stock market will move. But then when you zoom out and say, what's that look like over years or, many, many months, then you can kind of see, okay, what's the trajectory of that over time? And so I think
Mm.
token price is very similar. On a given day, we can see all the markets red, all the markets green because of some macro event. You can see subsets of those green or red because of some macro event or even some micro event, some particular announcement. Oh, that's terrible, right? Did the actual intrinsic value of all that change? No, just it was a perception thing, right? And so I think in the short term, very much a voting machine. People can vote and they can vote with their dollars and sometimes at size. And a lot of these, especially early tokens, are so low. And from a liquidity point of view, it doesn't take a lot of votes to change the outcome, right? It's like, voting in, your grammar school election, there's 19 kids in the class. A handful of votes can swing it a long way, right? But over the long term of like, hey, looking at this over the lifetime of like a vote in a much larger election, a single few votes isn't going to change it. That thing, it's going to take a long thing.
Interesting.
So I think token price is very similar, right? In the short term,
Mhm.
it drives to the narrative, it drives to the noise, right? Because it's 24/7, that kind of voting never stops. Um, and then in the long term, you look back, okay, what's the, market cap of this? What are the sort of the outcomes of this over like, many months or years?
Fascinating point because all of a sudden now, when you talk about a voting machine, in a democratic system, it's the votes are based on people's sentiment towards a specific outcome or candidate. In markets that are established, like the stock market, there's specific rules and regulations and boundaries so that no manipulation of said stock happens in terms of the sentiment, what is being put out. But in Web3, it's a lot more similar to the school voting system with who's going to be the president of the classroom, who's more popular than not. So a lot of how I see Web3 marketing, and it's based on what Luca did with Pudgy Penguins, is being able to rally the troops. No matter what is actually happening with the business behind the scenes, rallying the troops is what gets the price moving. So based on your experience with obviously one of the more established projects in crypto, D Labs, D Gods back in the days, what did you learn about taming the mob?
Yeah, I think it's tough. And you're right. Like there is, when you have a community, and that could be an NFT community, a token community, or even like your customers, right? And I think, again, I always like to use these analogies because, history doesn't repeat, but it definitely rhymes. And so I like to look back at other business experiences, right? And so in Web 2, you make a change in your product and a large number of your customers get very pissed, right? Happens a lot. You're like, oh, they changed the app, they moved my button, I hate this thing. Well, there's different ways to handle that mob, right? And I think in Web3, again, very financialized, so it's costing people's money. The emotions sometimes are higher because they feel invested, either positively or negatively, depending on which way it's moving. And so I think in all these cases, what I've learned is the best is to, you have to communicate, right? So I think saying nothing many times is just harder because then you can't even set the narrative, right? And so I think in a lot of cases, it's like, again, go back to Web 2 or without doing a press release, without writing a blog article, sending an email, doing whatever the right way to communicate with the right audience is, like you have to communicate to the audience to be like, hey, I'm here, provide both, your initial sort of thinking about what happened or what didn't happen, and then provide a way for that conversation to sort of happen, hopefully in a constructive way, but at least provide a forum for that to happen where you can have input into it, right? Whether it's going on a podcast, doing interviews, going to spaces. So one of the things that, we used to do back when something was good or bad, just open up a Twitter space, right? That way, the energy for that came to you because if you're on, you're a keyboard warrior, you're not going to go post on Reddit when there's a live space going on because nobody's going to be looking at Reddit, right? You're not going to go post on Twitter because your post is not going to get the same attention as if you're in the space and you're in the room and you come up and be a speaker and raise your cane there.
Right.
And again, that's uncomfortable at times, right? Because I think again there was a time in Zimbra, there's an early Web 2, kind of one of the earliest Web 2 businesses. We had built an email and a calendar app, and we had some bugs and issues in the building recurring events and calendaring is very messy. And we had this thing where it was one of our big universities was one of our clients, and there was an issue where an individual person on a meeting could delete the meeting. So it's like if you and I invited our whole team to the meeting, and then one person on the team could just delete the whole meeting for the whole company. Pretty annoying. Really annoying when like the teacher sends this out or the professor sends this out to groups of hundreds of kids and students, and one of the students deletes the meeting, and then the whole class is gone, for the year. So what do? They're really mad. They're really upset. We went there. We went to the stadium and sat in in an auditorium in a classroom, actually at the university. And the teachers were yelling at us. They're pissed, but at least it provided a forum to concentrate that. And so rather than having them file tons of support tickets and go into all these like random phone calls into our support line, we're like, hey man, just come yell at us here. Like it feels people sometimes want to release that emotion and you have to allow that to happen and listen and then take that feedback in and try to do your best to remove the emotion from that feedback. Because it's like, it could be triggering like, oh, you're a terrible person. You're the worst for letting this happen. And you're like, I understand your emotion, but what's the real thing? It's like, what can I do from here? What can I do from here is like, is there a way to recover the data? Is there a way to fix it? What are the things I can do to prevent it in the future? And then talk through that rationally. And you'll be surprised, not 100%, but 90 some percent plus people, when you have the sit down and rational conversation and be like, okay, we're both here. We're both fine. We're not injured. We're going to wake up tomorrow and be happy. What can we do tomorrow to make this better? We may not fix it. We may not recover the downside, whatever was lost, but what can we do tomorrow to make it better? And then just say, hey, I listened to that feedback. And then when you do make a decision, because the feedback's going to be potentially conflicting. One person's like, go left, one's go right, one's go high. You have different views on the community, depend on their state. So in crypto, you're going to have like, oh, I want you to, delete this token or release this thing or change this feature or change how staking works or change your tokenomics or something.
Yeah.
And some of those are one-way doors. You can't change them. But there's other things you can change. And then you can make that rational decision and say, I've heard all of the points. I agree with this one, or I'm going to do this one, and this is why. Or I'm going to listen to all of them and do none of those. But I'll take it into consideration, and I appreciate your feedback, right? And so I think that goes a long way, where a lot of founders get reactive. And it's hard, man. I've been in the space where, man, people are screaming at you. It's the whole, like, people are punching you. It's hard to just sit there and be like, yeah, thank you, sir. Can I have another? Like, you kind of like, there's a natural reaction to want to trigger back. And especially with like a type A people, and go keyboard warrior them back and be like, no, F you, or do this or that, or punch back. Or, like you have, it's a natural reaction, right? It's hard to kind of like the Zen monk sort of thing and say, yep, thank you. I understand. Let me move forward. And so I think, the mob is you have to face it, right? In a safe way, right? Doesn't mean like run into a big fight while it's actively going. Let the emotions calm down. And sometimes it's saying, hey, hear all the feedback. We're going to set up a space for next week, or give it a few days to cool off, right? If
Totally.
that's appropriate, maybe that's a way to defade. You're like, hey, let's take your time. Or here's a thread where we're going to listen. Please put all your comments in this thread. And at least you brought the attention to something where you have some control over where the conversation's happening, so you can be a little more thoughtful about your response, and then take your time to come back and measure that response, and then get advice of other people. I mean, just you asking the question, it's like, well, go ask other founders, go ask other mentors what they would do or how would they interpret this, to get some other opinions, because a lot of times your view may be clouded because of the emotional sort of high stress thing. And so a lot of times, again, going back to the Web2 or sort of like software businesses, is you would bring in a crisis PR firm. And a lot of times all they would do is just a different person in the room, right? It's not that their PR firm's better. Maybe they've done this before, but it's also just a different person in the room. Somebody else to kind of like be a neutral that doesn't hit. I'm just here to help. Tell me the story again. And you're like, oh, they did this and that. And you're like, wait, like that was last time. Like what's happening right now, right? Like recenter you to like take out the personalities of it and bring it to like, what's the real understanding here?
Got it. So what I got from what you were saying is that people want to be heard. They will either be heard by you or they will be heard by social media. They'll find an ear on social media, and you don't want the second option. Final topic that I want to bring up, Kevin, and this is a slight shift, one that I do think is important, especially in the current climate that we're in. How close of attention do you pay not only on what is happening in the Web3 space in terms of daily price movement, but more in the macro, how the economy is doing? How in tune are you with that?
Yeah, I mean, I like to think about it a lot. So working on a couple AI businesses, and then obviously working on some crypto stuff as well. And I think the economy itself is important, especially when you're building like any kind of business that's going to like, if it's a business, you're going to need to make money, right? And so if the economy is good and you're selling something that the economy is not ready for, right? If you're selling a premium product when the economy is down, or you're selling a consumer product and consumers aren't spending, pretty important, right? If you think about the super macro of where the economy is going and what are the trends, right? I was listening to a podcast and talking to some guys yesterday. It's like, probably wouldn't want to be in the like leasing of government buildings right now space in the US, right? One of the big things that Doge and Elon's teams are doing is going through and saying, hey, we've got a lot of buildings that are unused. We should just return those leases, and we should, cancel those leases. And so like, if you're in the commercial real estate space around big government centers for federal government, and they're very empty, and a lot of these buildings have been empty for a while or very lightly used, that may not be something you want to go lean into and be excited building around, right?
But for example, right now with in the crypto space specifically, crypto works in cycles, oftentimes correlated with the stock market. If you are to look at just macro, the inverse yield curve, the economy being due for a correction, we've been like only up for the last 10 years with only COVID a quarter. How are you looking at the economy right now, and are you thinking like, oh, this is gonna keep going, or it's like, ooh, this is like, if it was green, yellow, red light, we're probably at yellow light right now.
Yeah. I think it's an interesting perspective because I've always been, and I think, my sense is you spend a lot of time with crypto founders as well, is that there's always innovation and there's always exciting points. So you can look at the macro case of red, green, yellow, but like on any micro thing, there's always something that's screaming bright green. And it may
Mm.
be small, there may be not a lot of bright greens. And there's also, even in the best greenest of markets, there's something that's screaming bright red, right? And so I think when I sort of look at businesses or look at, building or look at the economy, it's like, it's one thing to look at the point in time and saying, hey, do I think like next week, next month, next year, it's going to go up or down in this macro or micro sense? But it's really like, if you look out over the next decade, hey, what is something I want to be working on? What's a trend that I want to be building against? Like, and I've always picked like new and innovative things, right? So it's like, would I want to go start, you know, a business that is not going to be hot right now? I wouldn't, right? But it's like being in AI, being in crypto, being in technology, right? I mean, technology's been wonderful to me for the last 25 years. You know, when I was growing up, we had like dial-up internet just barely. When I got to college was the first time I had like true Ethernet and you know, that got a cell phone. I think halfway through college, didn't have cell phones before that. Only my like uncle who was like a salesman had one in his car. It was a car phone. It wasn't really a cell phone back then. Um, but I think always thinking about what's new, what's next has found places where there's a lot more green, right? Because when you're on the edge of something new and you're on where the excitement's going, even if the broader economy's down, you know, yields or interest rates are down, those things typically don't impact the day to day of like, are you building something great that people want and that people will pay for, right? And at the end of the day, if you're working on something that's new and you've got a plan of how you're going to bring that to market and you found, you know, you're kind of looking for that product market fit, the macro economy will have impact, but it shouldn't drive your day-to-day decisions of like, you know, do I wake up happy or do I go to bed sad, right? Like it really should be about, you know, the old joke was like, are people excited for Mondays or Fridays, right? When you're excited for Mondays, you're ready to come to work and go for it, you know, pick your, you know, 24/7 business or whatever. But the real day is, are you excited for Mondays? Are you excited to get to work? And I would ask this question in interviews, like, you know, what gets you excited for Mondays and not for Friday, right? What are the kinds of things? Oh, working on hard problems, solving customer issues, you know, building something hard. And so I think when you look at the macro economy, like, I honestly think it matters, but I don't think it's like if you obsess over only that, my sense is you're going to probably, you know, it's like competitors, man. If you're chasing a competitor in a business, more than likely you're trying to catch up. You're not trying to get ahead, right? And so really you should be focusing on like, what is your unique value? What are you building for? You know, are you serving customers? Are you building something that your community, your customers, whatever that end result is, are you building for that? Then you've really, you know, it gives you something to be motivated on that you can work on for a really long time. And
Totally.
you're in a good economy and in a bad economy, you're going to find a way to be successful. And it may not be in the individual move. It may not be at a certain point. You may have picked the wrong company, the wrong vision, but hey, you can reset and keep building for that.
Kevin, thanks for joining me, man.
Awesome. Thanks for having me. Take care, Leah.